4.4, directors engage with clients on a regular basis in an effort to negotiate contracts and to increase sales and services. Directors engage with clients on a regular basis in an effort to negotiate contracts and to increase sales and services. So we are required to explain why there should be a company policy for all gifts, donations or favors received by the directors from clients to be declared to the board by the directors concerned. Provide 2 points. So it means that there is a situation whereby we will find that some of the service providers will be giving gifts to the directors. They are giving donations to the directors on their personal capacity, and according to the Act, those gifts must be declared. And this question is therefore asking us, why are those gifts have to be declared? Why is it important? It is said, explain why there should be a company policy for all gifts, donations or favors received by the directors from clients to be declared to the board by the directors. Provide 2 points. And the first point, we want transparency. The first point, that is transparency in providing or in awarding tenders. We want transparency in awarding tenders. So what we are saying, the reason behind this act of saying that this donation should be declared is that this donation might also be viewed as bribery. These donations, they might be viewed as bribery if they are not declared. So that is why we are saying it is important for the directors to declare. Because let's say there is a situation whereby a service provider has given a donation to a director on a personal capacity, and suddenly that service provider is awarded a tender from that particular company. One may end up viewing that as bribery. So that is why we are saying it should be those donations and gifts must be disclosed, so that when whatever that is happening in the company, there is transparency. There should be transparency even in awarding tenders. The necessary processes must be followed so that we know that all legal processes have been exhausted before one is awarded a tender. And therefore we are saying that these donations, if they are not declared, they might be viewed as bribery. So the main idea behind the article, you can see that some of these answers, you don't need to like copy it from the book or get information. You just, some of them, they require your general reasoning as to if a person is given a gift by a service provider. It's a clear indication that this gift, maybe this service provider wants something in return. So therefore, it is important that that gift must be disclosed, so that we ensure that when we are awarding a tender, the right processes have been followed, and that they may not be viewed at a later stage as bribery. So this is 4.4. This was only just 4 questions from question 4, which was based on corporate governance. And if we may just quickly recap on what we have discussed, we were looking at the impact of the qualified audit report, that the qualified audit report is not a good reflection of the company. And we had to provide 2 reasons as to why we are saying it's not a good reflection. It is because we know that when an audit report is issued, it means there is something that is not right in the financial statement. Maybe some of the documents could not be verified, some of the expenditure could not be verified, or maybe some of the documents which were required for audit purposes were not produced by the directors, and therefore it indicates that some information is missing or is unclear. So that is why we are saying it's not a good reflection. And we are looking at it from the point that even the existing holders, if the company is getting a qualified report, they will even decide to leave the company. And if we look at 4.2, where we were looking at the importance of the non-executive and the executive directors, we said the executive directors, they are just working there on a permanent basis in the company, and the non-executive are those who are also the members of the board, but they are not working on permanent. They only attend meetings, and in most cases, these people are highly qualified and they possess necessary skill that is required or expertise that is required by the company. So when they are brought into the company, they then bring that necessary expertise, and therefore they are able to guide even the executive directors in taking decisions. We said if there is more opinion from different views which may be obtained, and thus the company will improve. And even the non-executive may also act as watchdogs. They may be, because the executive directors will not do as they please if they know that there are some people who are also watching over them. And then 4.3 was when we were looking at, according to the Companies Act, the role of the Remuneration Committee. The Remuneration Committee is a committee that is required to decide on the salaries. And why is it necessary that we need to have a committee like that? It is because we don't want a situation whereby there is one person deciding. The directors are the only one who are making a decision. And remember, the directors are also the employees of the company. So they may take the decisions which will benefit them and disadvantage other employees. So it is therefore important that we have a remuneration committee in place which will be taking decisions in that regard. And then explain why there should be a company policy whereby gifts given to the directors must be declared. We are saying that if those gifts are given by the service providers, and at a later stage that service provider is awarded a big tender, that might be viewed as bribery. So we are saying whatever gift or donation given to a director must be disclosed or must be declared, and that when the companies awarding tenders, there should be transparency in awarding tenders and make sure that all processes are being followed. So that was it with question 4, which is coming from the November 2020 in bracket 2 exam, which was written in 2020, and this brings us to the end of question 4.